Hello, everybody, and welcome to this month's Analyzing Finance with Nick Livestream. It took a while for the live to load up correctly, but now we are here, and the format for this one is going to be a little bit different, as like kind of I'm doing with these 2025 live streams, is that I'm making them more thematic in nature, where I pick like a seasonal topic that kind of relates tangentially to analyzing finance with Nick, talk about that to begin with. And then after that, we just do our usual Q&A, and starting with the questions that people asked in advance, and then just what you guys ask live. And I don't have time to answer all of your guys' live questions, but the priority will go to those who asked me already in advance and in the super chats. And the first thing we're going to be talking about, though, is the Analyzing Finance with Nick March Madness preview. As you guys probably know, with my economics sports ball series, the sport I still follow really is college basketball, where I've lost interest in most of the other ones due to the changing economic nature, changing the quality of the sport. And my one exception here really is the world of college basketball. And so, yeah, we're getting people to wait to come on here to ask the questions, I'm going to start really with my prediction for the college basketball tournament bracket. And really, I haven't watched as many games this year because I've been busy more with this channel and other things. But let's start with the South, where we've got one seed Auburn versus Alabama State. I pick all the ones to advance to at least the second round. I don't think the one seeds are particularly strong this year, and the 16s are particularly weak. Louisville and Creighton. My grandpa went to Creighton, but I think Louisville is going to win because it's in Kentucky and they're underrated based on the analytic metrics, so they'll make it to the second round. Michigan versus UC San Diego down the highway here. I'm going to go with the Tritons, and they will advance to face Texas A&M, who, I mean, Yale, they do have their old money, but old money doesn't win you basketball games in the NCAA tournament. So next is North Carolina versus Ole Miss, and we're going to be my prediction for that one will be the Tar Heels actually advancing all the way to the Sweet 16. Iowa State, I think they're going to win, and the last two in the first half of the second round, I'm going to have Marquette in New Mexico. I think Mexico is going to win, and Michigan State is going to beat Bryant. And then the other side, we're going to have Duke take on Mississippi State in the second round. Oregon's going to crush Liberty, and they're going to play Arizona, and I think they'll beat Arizona too. And I think Duke will beat Oregon, and that's going to be that side of the East. The other side, I think BYU will beat VCU, Wisconsin versus Montana, St. Mary's Vanderbilt, and Alabama versus Robert Morris. And then what's it called? I think really the one who's ultimately going to come out of the East region will be Duke. I think St. Mary's has the potential to upset Alabama and BYU for Wisconsin. But beyond that, it's going to be a pretty boring side of that region. And then the last one we're going to be talking about is the Midwest, where I think that's the chance you have an 8 beating the 1, with Gonzaga being a little bit underrated here. And Clemson, I think, also is underrated here. Both of those could easily make the Final Four. Tennessee and Kentucky are good teams, but I don't think they don't really have like the talent advantage really to take advantage of Houston having a surprise early exit. So I think the winner of Gonzaga Clemson will make it on that side of the bracket. So really just with like my Final Four predictions, Like, I think you'll have Michigan State, Florida, Duke, and Gonzaga, with probably either Florida or Duke winning. If you want me to get into more college basketball specific questions, you can feel free to ask those here, but I don't think my audience is that interested in it based on the lack of engagement on this topic. So I'm going to go into the questions. The first question I have is, how can a mid-career professional in an unrelated field break into finance, particularly investment management, research, or trading? Relatedly, do you think a career change in finance is worth it given the looming mass adoption of AI? How will AI impact these fields in the short and medium term? Okay, that's an interesting question. And when it comes to the what you do, if you're a mid-career professional, this is what MBAs are for. If you have built your career in something completely different and you want to prove that you have the base set of knowledge to make the transition, this is why you get an MBA. So that your best bet, if you want to do it, is to get an MBA at a top 10 school in the US, or maybe their international equivalents. There's a few I could think of. And that's that's step one. And two, while you're in business school, you network in the industry and try to build case studies and other proof of concept of the knowledge you learn, and attach that to your your emails when you reach out to people. And then the terms, and then you just have to keep just hustling and making the effort really beyond that point. But in terms of the AI component, I think AI, what it does is that it removes a lot of the previous entry-level analyst jobs that used to be on Wall Street. So like, instead of me having to have another analyst to help me do research on doing details about a specific stock or a specific country's economy or something like that, I could just run it through an AI LLM and it could give me the gist of it. It may not be 100% accurate, but it can give me the brief summary that would derive my own decisions from. So I think it will make it harder for entry-level jobs in the field. On the other hand, if you're trying to start an investment management firm, it lowers your required headcount. So it kind of works. It's a double-edged sword in a way from that sense. Okay, so that's a follow-up question. What AI do you use for financial analysis? The main one that I use is ChatGPT for things, but you can't really use it for purely quantitative things because the numbers will be wrong. But you can use it to have deeper dives and read through a lot of 10Ks and Qs and other things and just give you quick summaries of certain things. I use Grok and Gemini for more sentiment-driven queries because they pull from YouTube and X, and that gives you kind of just a better idea of what like the average person is thinking, the marginal trader, more than like the actual like hardcore facts and fundamentals of the situation. And then on top of that, you can also use Perplexity, which I use to find deeper sources. And before Premium ChatGPT added citations, I exclusively used Perplexity because my problem with ChatGPT is I didn't know if it was making up the number from nowhere. Like, before I use any sort of research from a query I get from a ChatGPT or other AI platform, I used to always have to ask it, like, where did you source the information? Because at least they used to, like, when it first came out, had a very high, and even as recently as like early 24, had a very high hallucination rates. And so therefore they could just throw a random number out there and you have to check your work with all these things. So that's my take on that. Okay, another follow-up. Imagine if you're coming from Europe to do a master's degree in the US, thinking of breaking into finance. Where would you do the master's? Depends what you want to do in finance. Do you want to be private equity? Do you want to be hedge fund and like long only asset management world, investment banking? So that kind of has some degree, but I mean, the schools that regardless the best for MBA and finance, I would say are Columbia, Stanford, HBS, and Booth. Those are kind of the big four, I would say, if you could get into those. UCLA is a pretty good one too, Anderson Business School, and Wharton, of course. But yeah, and Sloan, MIT, but for more quantitative type things. So yeah, I mean, it's just the obvious players really for that one. And then that's kind of really all the questions when it comes to that. And then the other question that I got was also my thoughts on the future of the gaming industry. Do you see that crossover with crypto, NFTs, and other blockchain technology? How about a play to earn model? Do you think it could have some legs? Um, well, first of all, I'll go with the play to earn model. I mean, it's more just like you have to waste time watching ads to advance in the game. If you mean by that by play to earn, you already have that with a lot of these mobile games that are out there. And I guess it works to a degree, but it has a limitation. Like there's just you can't really make a super high quality game with that. Um, and so that's kind of the problem with it. In terms of gaming in general, basically the being bullish gaming is short the prospects of young American men, especially young American men relative to women in terms of their career earnings. If you look at it that way, the performance of gaming stocks and like video game sales is very interesting. And I'm somebody who likes to play video games, and I played probably way too much of them in my mid teens, but like when somebody's economic prospects gets better, particularly for a young guy, you upgrade to other hobbies or you're too busy with work. Like the main reason that I stopped gaming, or at least don't play as much as I used to, was mainly just due to lack of time to do it. Like I was busy with my work or school or starting a business or social life or hobbies or whatever. And if you are really struggling financially and have a low income and not very good career prospects, you're going to have more free time to game. And gaming offers the cheapest dollar per hour worth of entertainment. And like I guess YouTube and some video stuff content is absolutely free. So I guess that technically, but like in terms of things that can fully immerse you more, I'd still say it's gaming. And that was my bull case for video games for 10 or 15 years. But basically, the recent months, I think the economy is realigning in a way where young men's economic prospects are going to get a lot better. And so, therefore, the value proposition for gaming from a macro perspective is not as attractive. I mean, I still like some of the gaming companies. I'm not going to get into specific stocks because I don't do that in this. But I think that high quality games will still have their place, but I think that some of the lower quality gaming companies are going to struggle, and I think you might see aggregate demand for the industries flatline, um, at least relative to GDP. But overall, I'm neutral on gaming. I used to be very bullish, but I've kind of come less bullish because I think the economy is going to be getting better for younger people. Now you guys want to see the bracket. So I just thought I was boring you guys to death with the bracket, but I will go back and redo it because I talked about it a little bit in the beginning, but I kind of rushed it. I'll do a more detailed analysis because now the fans are asking for it. So that and then how much? Well, I'll ask for one more question before I get to the bracket. How much do demographics and birth rates play in your financial analysis? It does play into it more on the single stock level, believe it or not, than on the macro case, because people consume different types of products in different stages of life. So if you know, like, if a certain generation is going to be bigger or smaller than the previous one, you can kind of imply the bigger or smaller demand for that given product. Like a big example for this is the enrollment cliff that's going on with colleges. Like, you've had birth rates be very low for almost 20 years. Basically, since 2006, 2007, you've had sub-replacement birth rates in the United States and in Europe. And now a lot of these kids are now approaching college age right now. And so you're going to have a same amount of slots. You actually might see expanded slots for some universities because of public pressure to expand the class sizes to grant more access to people. At the same time, you have the less younger people matriculating into college because there's just simply less of them. Like the class of 2013, I think was the biggest college class in the history of America, and it's gone down, I think, every year since then. Or it might be 15, but it's around that time period. And the main reason there's some is because the young people are not wanting to go to college because the value proposition is there. But the main driver of it, more so, is simply there's just less people who are in that age cohort. And that's how you can use demographic analysis, I think. Like, I wouldn't really predict the whole fate of countries depending on which countries are younger or older, because first of all, AI and robots are going to change a lot of that. Like, having a bunch of young people is an advantage in an analog world, but it might not be an advantage in an AI world. So it's not really that straightforward, really, in terms of demographics. But I think it could be more used on the micro level, like within countries and within certain industries. And you can see different generational dynamics. Like certain generations have different hobbies than others. They have different vices than others. And you can see as one generation turns over, another one becomes the main buyer. It greatly affects a lot of companies who provide certain goods and services. So that is my take. Do I participate in angel or seed investing? Not really at this point in my life. Like, my firm doesn't really do that either. I'm more involved in publicly traded assets. That's what I'm trained in and have my knowledge base in, and I prefer liquidity over not having liquidity. So now we're going to go back to the bracket. And while I'm doing the bracket, people feel free to ask your questions, and I will come back. And I'll take either our general finance and economics question or college basketball related questions for this one. So I'm not going to take college basketball questions again until next March. So, actually, I'll expand it just to sports questions in general. This will be the live of the month that I'll do, of the year that I will do sports questions, will be the March one. So, but it's still mainly going to be finance stuff. So let's just start with, again, I mentioned it earlier, like for the South region, which is the first one, I think it's the first round winner is going to be Auburn, Louisville, UC San Diego, Texas A&M, Carolina, Iowa State, New Mexico, and Michigan State. And then in the Sweet 16, I think Louisville is going to play them close. I mean, it's in Kentucky. I mean, this one could be an upset. The problem is, like, Louisville, every time they've haven't really beat a good team out of league. So that is why I still am going to give Auburn the chance to squeak by. And also, I don't want to have an 8-12 matchup in my Sweet 16 because I think UC San Diego will also beat Texas A&M. And because of that, you've got Auburn versus UC San Diego. So I think Auburn will go to the Elite Eight. Auburn is just going to out-athlete the Tritons. They're not particularly physically imposing. And then you have, on the other side, I think North Carolina will be a kind of sagging Iowa State team and face Michigan State in a kind of our Maui Invitational, I think, rematch in the Sweet 16. And I think Michigan State will beat New Mexico. And I think Michigan State's going to beat North Carolina and Auburn to make the Final Four from that region. So then you've got the West, where I've got Florida facing UConn in the round of 32. I don't think UConn's going to be able to three-peat, but they could give Florida a scare. Like, the thing that's kind of scary about this year, the NCAA tournament, is the 1s, the 5s, and the 8s are particularly stronger than usual this year, whereas the 2s, the 3, and the 4 seeds are kind of weak this year on a relative basis. So keep that in mind when building your brackets. And then the only 12 I'm going to have win is UC San Diego. I think Memphis will beat Colorado State. When Memphis plays a good team, they step up. They tend to slip up against weaker competition, but I think they'll step up against Colorado State and Maryland to make the Sweet 16 against Florida. But I think Florida is going to beat Memphis. And then you've got on the other side, I think St. John's will be Florida's opponent in the Elite Eight. I think Drake could upset Missouri. I think Texas Tech will make it to the Elite Eight, though I think the Sweet 16 as well. I don't think Drake really has the size to really go against Texas Tech. I mean, I think they'll pull off at least one upset, though. I think Arkansas will beat Kansas. And I think St. John's will make it to the Elite Eight and beat Arkansas, Texas Tech, and Florida. But generally, teams that start unranked in the preseason, like St. John's, they generally don't make it to the Final Four. The track record is Drake already got crushed by Lamar. That's actually a pretty funny joke. Yeah, so I think that what's it called? You've got, and there actually is a college, Lamar. They're not very good. They're a Southland team. They're not in the tournament, but that would be kind of hilarious if they ended up playing one day in March Madness in the future. So I think, yeah, Florida's going to make it out of the West. So the first half of the Final Four is going to be Michigan State, Florida. And before I do the East region and the Midwest region, I will get back to general questions here because you guys asked a few of them. Optimal way to hedge against dollar losing dominance, or is this something you can't worry or prepare for? Well, yeah, I mean, it depends on how much money you have to hedge. So, I mean, yeah, there's a few ways you can do that. Like if you just are just bearish on all fiat currency, there's gold and silver. If you think the dollar is just going to be particularly weak against the rest of the world, you just buy international equity or international real estate in places that property rights are good enough to do that. And just as a disclaimer here, nothing in this live stream is investment advice. Do your own investment research, do your own due diligence, or hire an investment advisor to help you because, yeah, I talk more about bigger picture things here. I'm not going to go into the weeds about specific investments or specific stocks, but yeah, in the world that the dollar is weakening, international assets are going to outperform. Commodities are going to outperform. Precious metals will outperform. That's essentially the weak dollar trade. And then another question I have is, my college econ professor told me that macroeconomics is not real. What's your view? What do you mean by macroeconomics is not real? Because macroeconomics is just economics on a bigger level. It's just, I talk about this in the iceberg of econ. It's just accumulating things on the individual markets into the aggregate. And a lot of the principles in microeconomics also apply to macroeconomics. Like where you might say that you might be meaning by that, just if I want to be clear, is that macroeconomics doesn't have different rules than microeconomics. And I generally agree on that. Like, I'm not really a fan of Keynesianism, where like things that would be bad for like the balance sheet for like a private business, which should be good for the government, or like that you can break the laws of microeconomics just through the power of the state. So if you say by that, then yeah, he might have a point, but that kind of macroeconomics I don't think is real. But the idea that macroeconomics isn't real is just not true. I mean, I literally built this entire channel talking about macroeconomics. So yeah. What's it called? What's your outlook on the markets for the rest of 2025? Do you think a recession is probable? Yeah, I do think a recession is probable because, well, the consumer was already stretched going into this year. Like you have record levels of credit card debt, and auto delinquencies are not record all-time levels, but they're they're at multi-year highs, and default rates for things like consumer credit and auto loans and stuff are at high levels. A lot of the price increases from the pandemic, like are not coming down enough, and incomes didn't catch up. So a lot of people in the bottom half of the income distribution are really feeling the squeeze right now. And on top of that, you have things like the Doge that's going to cut a lot of government workers, and those people are going to lose their jobs and take out spending. You're going to have some readjustments due to just general cuts in government spending. If you're not firing people, all these spending cuts are money going somewhere. If you look at the budget deficit, it's 6% of GDP last year, and GDP grew 3%. So if you actually had a government that wasn't spending beyond its means, we would already be in recession. So like that's why I think it's not take that much to tip things over. And I think really the Doge is going to be the catalyst to tip things over. And the other thing too is a lot of younger people, including people my own age, don't really seem to understand is that recessions aren't always necessarily a bad thing in the long run. Sometimes you just need to clean out a lot of the imbalances. And since 2008, really, due to large levels of fiscal and monetary stimulus, you have accumulated a lot of excess dead weight in the economy that needs to be cleaned out. And that's what recessions really ultimately do. So like, yeah, if a recession happens, it doesn't mean like run for the hills, your life is over. Like it's often a great investment buying opportunity because investments come on sale. It's a good way it's often a good time for entrepreneurs because you can be able to hire talent that either not be available or at a much cheaper rate than you would in better economic times. As long as it just doesn't extend into like perma depression, like these occasional cleanouts of market clearing events can actually be the spark of a healthier foundation for growth in the future. So yeah, that's kind of my answer to that question. Then the next one is, do you think World War III is probable? No, absolutely not. I think with nuclear weapons, it kind of puts it off the table. Like, because if you're going to have World War III, it's going to be the end of the world, essentially. So I think they will find other ways to fight these wars. And so now I've got some more questions. Let's get back to the second half of the bracket. Let's start with the East Regional. And I actually did get a March Madness related question here. What are my thoughts on Grand Canyon? Grand Canyon is interesting, and it's kind of one of the ways you can actually trade March Madness because Grand Canyon is a publicly traded company, which probably a lot of you guys don't. Maybe this audience probably knows that, but a lot of people don't realize there is a college that's competing in March Madness that is a publicly traded company. I have no position in Grand Canyon. I have no plans to trade it. I haven't done any fundamental research on it in years, so I'm not going to go into my opinion on its investment merits. But if Grand Canyon has a surprisingly deep run in the tournament, the stock's probably going to move on that. But just because it'll encourage increased enrollment. And there's actually a lot of academic research to show that when a smaller college that's more obscure wins in March Madness, it will increase enrollment for the school. Or if you have consistently good sports, whether it's football or basketball, it increases the academic prestige of your school because it brings in a lot of more students who want to go there. Like example, Alabama has moved up, I think, over 30 spots in the U.S. news rankings since Saban took over because more people want to go there to be part of that football dynasty. SEC schools previously who never had like college students from California wanting to go there, you now see it in like suburban, upper middle income and upper income young people from Southern California now want to go to schools like Ole Miss, Georgia, Alabama, Auburn, etc., because they want that SEC football experience and those teams are winning. So you have this is a real effect. And Gonzaga example is the biggest example. Like they almost went broke. They had a real financial issues because of just declining enrollment and like maybe economic struggles in Spokane. But then the basketball program had their magical run 99, and they were able to compound on that and be a consistent winner under Mark Few. And now Gonzaga school has turned around and has record levels of enrollment and demand for their school. So it does have a real effect on the fate of your universities. So yeah, that's kind of my take on Grand Canyon. Um, and then when it comes to I forgot where they are on the bracket, but I don't think we've covered that. I know they're in the tournament as a 13 seed, so I think they're in the last region because they're not that I'm going to cover here. But I think that you've got my predictions is for the East Regional. I think Duke is going to beat Mississippi State to go to the Sweet 16. Baylor could beat Mississippi State because Mississippi State's a bad shooting team, but I think they're consistently played better than Baylor throughout the season. Oregon, I think, is underrated here. I think if any team is going to beat Duke and prevent them from going to the Final Four, I think it will be the Ducks. I think but I still think Duke will beat the Ducks. But yeah, if somebody's going to do it, I think it'll be Oregon. Dana Altman generally steps it up in tournament play, no matter how well the regular season goes. And Oregon hasn't had the same injury bad luck like they've had the last few years. So I think they're very underrated. They had a bad losing streak in I think like in January, and it's kind of put them under the radar. But yeah, I think they're going to crush Liberty just like they did in the Fiesta Bowl a few years ago. And I think they'll beat Arizona. Arizona is one of these teams that did well in the Big 12, but didn't really do well out of league. So I think that I think Oregon's going to beat Arizona as well. And then BYU versus VCU, I think BYU is going to win. VCU is a solid team, but they didn't really do anything out of league to prove to me that they can win this matchup. I think Wisconsin's going to crush Montana. And I think Wisconsin might be another team that their style of play makes them more prone to upsets. And I think BYU is going to probably upset them to make it to the Sweet 16. And then Alabama, I think will win against Robert Morris pretty handily. I think St. Mary's will beat Vanderbilt. St. Mary's is a generally underrated team. And they, with the exception of last year when they lost to Grand Canyon, they generally win when they're favorites in the tournament and the higher seeds. And then Alabama versus St. Mary's, I think that St. Mary's can beat Alabama. They have like the talent, and this team can actually play fast, unlike previous St. Mary's teams. But I would probably gonna have to pick Alabama. But I wouldn't be surprised if St. Mary's wins. And St. Mary's did beat Alabama. I think they would beat BYU too, and make it to the Elite Eight versus Duke or Oregon, where I think they would lose. But I think ultimately it's going to be Duke versus Alabama in that region, and Duke's going to win. So then the final region is the Midwest, and Houston I think will beat SIU Edwardsville. Gonzaga, who's top 10 in terms of all the predictive metrics like KenPom, but they're an 8 seed. I think they're the most likely to upset a 1, but I think 3 of these 8 seeds could pull off the upset. I think Mississippi State, is going to lose to Duke every time. But the other ones, Louisville, UConn, and Gonzaga, all have the potential to pull off the upset. I think Gonzaga is the most likely to do it. And I think they will beat Houston. And Houston has lost to teams like San Diego State and others. They can lay an egg. So that's where I'm going to go with that. And I think the other underrated team in this region is Clemson. They had a good run last year. They beat Kentucky. They beat Duke. They have the ability. I think they're going to crush McNeese again, like Gonzaga did last year. I think Purdue is on the rocks. I think High Point can beat them. But even if Purdue squeaks by High Point, I think Clemson's going to win that matchup too. And you're going to have a Gonzaga versus Clemson matchup. And I think the winner of that game, which I'm going to guess the Zags, but I think whoever wins that game, I think will make the Final Four out of this region. And on the other side, you have what's it called? Illinois versus the Texas Xavier winner. I don't think either one of those teams is that great and would probably could easily miss the tournament. I think Illinois is going to win, and I think Kentucky will beat Troy, and Kentucky will beat Illinois. I think UCLA will squeak by Utah State. Utah State hasn't been playing that well lately, and they tend not to do as well against teams with more like elite athleticism. And Tennessee versus Wofford, I think Tennessee will win, and I think Tennessee will beat UCLA. UCLA generally doesn't do well when they play outside the West Coast. The only reason I'm beating them against Utah State is because Utah State's also a Western team. And then I've got Tennessee coming to play the winner of the Conference Gonzaga game. And then Final Four, I have Duke, Gonzaga, Michigan State, Florida. And I think the Final Four will be between Florida and Duke with it's kind of a toss-up, honestly. I think the Gators will win, though. That's the one I'm going to guess. A little bit of a non-conventional pick, but they seem to be one of the better teams. Auburn and Houston are kind of reeling after good starts, and Duke has some injury issues. I think Flagg is the best player in college basketball, but yeah, I mean those are my picks. Now let's go to the regular questions because we're done with. I'll still answer college basketball related questions, but that's my bracket. So Florida beating Duke and the other two teams in the Final Four will be Michigan State and Gonzaga. Now let's go to some of these questions. Have you ever commented on the renting versus owning debate? Okay, so I think that it depends on where you live, honestly. Like if you live in a place where renting a house costs $10,000 a month and buying the same house is $30,000 a month, you're probably better off renting. If renting costs, let's say the same example. Let's just say now rents have gone up and interest rates or housing prices have gone down, and now they're each $20,000. You're better off buying the house. So unless if the rent is trading, it depends on where the rent is trading relative to the purchase. And also, do you trust yourself to invest the difference? Like if you're going to end up just spending the money irresponsibly, then you're probably better off buying the bigger house because at least it's forced savings. If you can invest it into things that have higher yield, then you're probably better off renting. So it depends really again where you live. That's the answer to it. And also your station of life and if this is a house you want to trade up or a house you want to live in permanently. Like if you made your money and you want to live in a nice house permanently, you shouldn't really care if it's going to go up or down 10 or 20%. You shouldn't want to live there. It's more of a consumption decision at that point. So there's a lot of variables. Who is your favorite March Madness star from a Cinderella? Krutwig was a good one. I generally there's a few. I mean, I thought the 2000. I don't really think of it really as players, but more teams. Like I like 2021 UCLA. That was a pretty fun run. My brother went to UCLA, and I went to a UC school, so they're generally my default power school to root for. And they were like this 11 seed that kind of came out of nowhere and took Gonzaga, the number one undefeated Gonzaga, to overtime and required a heave from Jalen Suggs in overtime to beat them. Juzang was entertaining and all those guys. I would say another one I liked was 2006 George Mason, because that was the first time in my lifetime where you really saw like a non-Power 5 school really make it all the way to the Final Four. And they beat like really traditional blue blood programs. They beat Michigan State. They beat North Carolina and UConn to get there. So that was another one. And then Shabazz Napier and that UConn run was a good one. And Kemba Walker run, that's probably in 2011, but that's not really Cinderella, but he kind of just took UConn on its back from a 9 seed in the Middle East, the Big East, 5 games in 5 days, and then won the whole NCAA tournament. But next, I got a super chat. Thank you, Isaac. Any advice on specifically getting into finance from a non-target school? Keep up the good work. Yeah, I mean, I went to a non-target school, so I can answer this question. Yeah, so I mean, the thing is that your challenge is to prove one is either, there's two of them. One is lack of connections to get you initial leg up, and two is to prove that you actually are like at the level that people perceive to be target students to be at. So what you need to do is you're just gonna have to make up for it with more direct ways of networking. Like you have to go out to certain events. You need to reach out probably instead of you're not gonna be able to rely on sending things on some application where an AI scans for Harvard and will automatically throw your resume in the digital dustbin if you don't have it on your resume. You're going to have to, so you have to have, I would attach case studies, like examples of what you can do to show that your knowledge base. CFA level 1 what helps if you're looking to get into the buy side of things. If there's certain other certifications for other parts of finance, and yeah, and if in investment, and you might have to work at smaller, more emerging firms to start too. But yeah, it can be done. It's just going to require more outside the box thinking. You're not going to be able to rely on your school's career center, or just the reputation of the university for people to give you a chance. And yeah, also if you're at non-target, internships matter more too. Like, because if you've done the internship and you've good reviews and references, that could really advance you as well. So now hopefully that answers your question, but thanks for the super chat. The next, now I'm going to scroll up and read some of these comments and questions. Do you think you have a video coming out the inefficiencies created by NAFTA? I haven't really thought about making a video about NAFTA, honestly, at all. So, that's kind of my thoughts on that one. I have a lot of interesting videos that I do want to do related to recent economic events, but NAFTA really isn't one of them. What is my opinion of day trading? 99% of people lose in day trading. I generally think it's really hard. The longer your time frame is, the easier it is to build an edge. The shorter the time frame is, the more difficult it is to build an edge against market makers. That's my take. What are your thoughts on using levered ETFs? I'm not really a fan of levered ETFs for various reasons. Also, just the way that you have to be very careful with how they're structured too, because a lot of them reset in certain ways that the returns don't correctly mimic a lot of these things. So, yeah. Next question I am going to ask is, have you heard of Edward Dowd? Yeah, I used to read him on Twitter back when he was anonymous. And he had that little, for his handle, he had a picture of my pal Totoro. He is an interesting guy. I haven't really, since the pandemic, I haven't really seen much of him, to be honest. So I don't really know what his current views are on a lot of things, but I thought he had interesting ideas. Some of them I agreed with, some of them I didn't. I don't really familiar with what he stands on stuff to say a definitive view on his beliefs. What is your opinion on pursuing an MBA? I think if you're trying to change careers, it can be very useful. Like, say, for example, you worked in industry and you want to become an investment banker, or if you worked on the buy side and private equity and you want to become a management consultant. That kind of move, those kind of like moves are the main reason why you want to get an MBA, is to change careers that you don't really have a base set of knowledge to prove that what you're doing, and or you need the prestige boost to get in. Because like if you're moving up within your own profession, you could prove it just through experience and competency. You don't need within your own field or more professional type certifications and that you can take just doing exams independently versus spending 2 years in business school and the $100,000 you need to spend on business school. The other thing is if your company is paying for it and it's needed for promotions up your corporate ladder, that's another time it makes sense to go to business school. But those are generally the two situations where it would make sense. So yeah. Otherwise, I'm generally against graduate school. Let's see. What personality is best needed to trade options? Why did you stop? I'm not going to go into my career path decisions on this, but I think personality type for options, it's very analytical people, those who are more even keel with their emotions, and like it's a lot of it is just like blocking and tackling on the in options more than just trying to go for home runs. Like most like options trading is often more in the market making versus the market taking side of things on the institutional level. But yeah, I think it's very analytical, intellectually curious, but also not doesn't is a little more of a stoic mindset and doesn't really get overly emotional. It's the same skills that make you good at, say, like playing poker. That's why a lot of these option firms train their analysts and portfolio managers through playing poker. So that hopefully that answers the question. What is your opinion on staying friends with people who before you rapidly increase in social class? Um, yeah, it is possible to stay friends with people, but they have to have the same mindset of being willingness to advance. Otherwise, it's going to cause tension, and there that it's but it generally there's a reason. I think friends also are a lot more flexible than say like romantic relationships because your friends are not mutually exclusive. Marrying somebody, you're picking them for life. You can't else. Whereas with friends, you can have multiple circles of friends and level of emotional closeness to them. So yeah, I think there's a lot more room to have interclass friendships than interclass relationships. But you need to be careful about motives. Just like that's the main really concern. Like if you're somebody, a friend of yours is a very different social class, you got to be aware of any potential power dynamics going on there. Yeah. And then the next thing is what role would AG play in the economy in the 21st century California? What do you mean by AG? Is like the Attorney General? Okay. Brian asked me, what am I doing for Lent? And I got another question about how's Lent going. Lent has been going well so far, but God has not been cooperative in terms of the weather because my Lent challenge is to walk 15,000 steps per day for Lent. And it takes about 2.5 hours to walk that much at my pace. So it's kind of challenging, and especially if it's raining, like it was the first week of Lent here in California, I had to pace up and down my apartment or on a treadmill at my gym instead of being able to take a nice stroll outside like I usually do when I go on my walks. So that's kind of what I did for Lent and it's been going well so far. Um, have you seen those stock market is a Ponzi scheme videos? Yeah, I have, and I don't think that they accurately represent the stock market. Agriculture. Okay, so agriculture in California is going to be critical to the economy, but I don't think its role is going to change any differently than it is now. Like, if I think that you might have to change which crops you're growing because it's not water efficient to grow certain things in California, even if the Delta smelt controversy and a lot of the political issues withholding water from farmers get resolved. Um, it's still, there are certain water intensive crops that probably do not make sense to grow in California, but I think the market should be the one to really decide on that. I think ag is stable. It's not going to be going up or down too much to drive California's economy one way or the other. Yeah. What's it called? Then let's just go through some of these other questions I've got here. Do you have any thoughts on working as an energy trader or energy analyst? I have friends who are energy traders and they've done well and enjoyed it. If you are really interested, crude oil is a really interesting market to really like analyze and break down. I think if you can get the job, I think it's a good thing to do, honestly. I got the next question I have really is what are the odds of the EU failing within 10 years? I think it's actually dropped in recent years because it seems like the economic growth has diversified a little bit and it's not really solely reliant on Germany like it used to be. So I think like the main risk of the EU was Germany abandoning it because their economy was doing so much better than the rest. But now, due to particularly bad economic policy in Germany, especially bad energy policy, it's not really it's not really they've fallen down to the rest of the pack. So I don't think the odds of their economy collapsing really is not that. I mean, sorry, the EU collapsing is not that high. I'm not as crisp as I am on my videos, but yeah. And then the next question I have is someone who's a small business owner in a highly liberal area. I agree with the talking points from a bird's eye view. Thoughts on covered call ETFs versus selling options long term? Well, watch my video about covered calls I did in December of 2023 for my full thoughts, or the interview I did with Chris Adel-Massey, which he way more eloquent in December 2024, where he more eloquently explains the my concerns and reservations with covered calls. I'm personally not a fan, but I'm not going to repeat the whole thing. I did 2 videos discussing this heavily. Do you ever watch What If Alt Hist on YouTube? Thoughts on him? That's funny you say that because What If Alt Hist, his reaction to his video saying that the economy would be in depression in 3 years was the first video on this channel that actually got attention from the general audience. Like before I made the first What If Walt Hist reaction video back in August of 21, I think we had like 30 subscribers and I was doing this very infrequently. But then I saw that reaction video got 20,000 views and it got attention to the channel. And so it turned this channel from a low double digit view subscriber channel to like a 400 or 500 subscriber channel. And it got engagement from comments and it's like, hey, people are actually listening. It made me motivate me to keep going and pushing the channel harder. So I have to thank him for that indirectly. So, but I think that over the last 3 years, I think his main channel has declined in quality, and I think there might be some things going on in his personal life based on some crazy videos he released over the holidays. I still like History 102. I think that's much better than his core channel. I don't really watch his core channel anymore, but I do still watch History 102, and I think that one's good. So I think he needs to stick to the history and not go into some of his other philosophies. That's my take on him. And if he ever is watching this or would like to do a collaboration, let me know. I'm actually going to head out to Austin, Texas at the end of April. I know he's based out of there. So if anybody who knows him wants to help me arrange a live debate with him in Austin, I would do it. And speaking of live events, I am traveling a lot more for the tour. We've got several events coming up for Analyzing Finance with Nick. The next one we're having is here in Newport Beach, California on April 5th. It's a Saturday. California people, I recommend coming. And then we are going to Texas. And the first one we are going to will be in Dallas. We're still looking at this big venue, but it'll be in the Dallas Metroplex on Friday, April 25th. And then we are going to be having a meetup in Austin, Texas on April 27th, Sunday. And then I'm going to be going across the Northeast. And I know a lot of you guys have asked me about New York, because New York is the most popular city for this channel. And DC is the second most popular city for this channel. And I am going to be going to New York on May 10th. It's a Saturday. If you guys want to see me there. And if you're, also for my New Yorker fans, if you have any ideas, recommendations for a venue for 30 to 50 people in New York, I need help with that. Like I don't live there. I'm not familiar enough with this, and that's probably going to draw a pretty big crowd based on the reactions I've got so far from the poll. And then I'm also going to be going to Philadelphia on May 12th. And then DC will be May 17th. And then we're going to have Calgary, Alberta on June 1st. So that's the one Canadian one. So all my Canadian subscribers want to see me in the borders. Go to Calgary. And then we're going to have Chicago on June 7th. And then Seattle, July 26th. Los Angeles. Sorry, I'm losing my voice here. Los Angeles, July 12th. And then we're going to do another Bay Area one in August. We're also going to go to Fresno, California, August 20th, August 23rd in Santa Cruz, which is about 45 minutes south of San Jose. So Bay Area people want to see me again, August 23rd. And then we're going to Europe, this is the first time I'm announcing these, but we're going to be having 4 European stops, and now the dates are kind of set for them. The first one of these is going to be in Amsterdam, the Netherlands, on August 30th. So if you're in Northern Europe, that's probably the best time to see me will be when I'm in Amsterdam. And then we're going to be doing 2 in Switzerland, possibly 3 if there's enough of you guys in Ticino, because I'm going to go to visit Lugano, but I don't have a meetup plan in Lugano yet. But we're going to have September 2nd and September 3rd in Zurich and Geneva, respectively. And I know Switzerland is my most popular country in Europe for the audience here, surprisingly more so than the UK. But so my Swiss audience is going to have 2 chances really to see us. And then we're going to be doing one in Rome on September 5th because I'm going there for Catholic Jubilee. So all of my Italian subscribers, or just those who happen to be Catholic and going on the pilgrimage with me, that'd be great to have you guys all meet up in Rome on the 5th of September. And then the last stop we're going to have is going to be in Boston, at least the last scheduled one, which is September 20th in Boston, Massachusetts. And then we're probably going to add one in October in the Midwest. And I think I'd like to take a poll on this, actually. And would you rather have me come to Cincinnati, Ohio, or Louisville, Kentucky? I have some personal reasons that I'd like to go to that part of the country. And so I might as well do a fan meetup while I'm out there. So feel free to write in your comments if you're Midwestern people who can't make it to Chicago, if you'd rather see me in Louisville or Cincinnati. So that's probably going to be the last one. So that's all my updates on the tour. So now that I've now that I've got the tour wrapped up in terms of like discussion of it for now, let's get back to some of your other questions. Let's see. What are your thoughts on integrative medicine, like ways to well and the divergence from insurance models? Brian, can you go into details what you mean by integrative medicine? Like, I'm not really familiar with that terminology. Let's see. I rarely hear much about South America. What are your thoughts on the continent? Well, my last Geography of Wealth video was actually where the old money is in South America. I talked about Argentina and Uruguay and Chile. And my economic outlooks on those countries are very similar to when I did those videos at the end of 2023. And I did Argentina right after Milei got elected. I think the only difference is it looks like it's working. A lot of the stuff he's doing, like they cleaned out a lot of the structural issues. He's actually gotten down the deficit. So there's some good news going on when it comes to Argentina. So it looks like there's more traction there. So I'm still pretty bullish on Argentina long term, like I talked about in that video. Chile, I think, could be another story like Argentina once Boric is out. And Uruguay is just going to continue to benefit from growing wealth in the region. So I'm optimistic on all of those three countries, whereas South America, not so much. And my video from my views on the economic future of Colombia and Brazil that I did back in 2023, my views haven't really changed since for either one of those two places. And with Peru, I did a video on them, and Bolivia, but Bolivia was more of an AI experiment than really one of my truly in-depth analysis. I think the only countries really I haven't covered down there on the channel are Venezuela, Paraguay, Ecuador, and Suriname and Guyana. But those latter two are kind of really too small really to do an economic futures series on. And if I'm going to do another video on South America, it probably will be the economic future of Venezuela. That's probably the most interesting topic that I really left to touch, or maybe an update on what's going on in Milei in Argentina. Okay, so Ways to Well is a company that's doing full service cash medicine, sleep, cold plunging, peptides, stem cells, traditional pharma. Okay, so you're looking basically switching back to cash medicine is your question. I think cash medicine has a place. Like in an ideal world, health insurance would be more just for catastrophic things. Like if you get diagnosed with like cancer or you get hit by a bus or something like that. Like just where like the left tail risks something bad happening that like it's just impossible to really have a family realistically save for within a year's time. But like anything under, say, like, I don't know, $10,000 in spending should probably be more market based and less insurance priced. That's that's kind of what my take would be on using these kinds of medicine. I think it definitely has a place, but I think insurance has a place too. The problem is that we're trying to use insurance and third-party buyers for things that should have more first-party buyers, and as a result, there's a lack of market forces where there should be. Next question is, let's see. I'm going to go scroll the questions. Oh, yeah. Thank you, by the way, Matrix, for asking about if Rudyard liked to debate. He's too busy. That's understandable. But, yeah, I'm coming to his home turf then. Otherwise, if he ever wants to talk with me, I'm glad when he is available to do it when he's available. Let's see. How do you think you developed such a nuanced perspective? It's quite refreshing. I try to think about the other side when I present things here on YouTube, particularly. I mean, I have very strong opinions about a lot of this stuff. My friends and family would definitely tell you that. I'm a little bit, but I try to be a little bit more objective on the channel because it's more for educational purposes, and I don't really try. I'm not trying to be a polemic, and I can kind of see. I try to figure out. Also, being in markets, you learn a lot of times that you can be wrong and really wrong, and so it kind of humbles you for making claims when you're on the wrong side of a trade. That might have something to do with it too. But I also am just intellectually curious and I want to understand why people think the way they do on one side or the other and try to figure out what second order effects are, because a lot of the things that surprise people in this world are not like, or what really impact the world are not just the things I expected, but the unexpected second order effects that often happen when it comes to major economic policy changes or trends in society or even company performance. Uh, but yeah, that's kind of my take on that. Have you read the Market Wizards series? Yes, of course I've read the Market Wizards series. My trading mentor in college assigned it to me as required reading to read the first Market Wizards, and it's more of an inspirational read. It's kind of like Rich Dad Poor Dad for traders in a way. Like you can't really use anything from those books to improve your current process because they're outdated in that way, but you can use them for help develop the right kind of mindset to approach trading as a career or money management. It's kind of like what Rich Dad Poor Dad. Like it's not going to teach you how to be rich, but if you're a high schooler, that's kind of the age I recommend reading that book. It gives you the mindset about how to approach career planning. And I think it's the same way with Market Wizards. I've read all the Market Wizards books, and it's a great series. And I think Jack Schwager's done a great job with it. And then, yeah, that's my answer to the Market Wizards series. I'm going to scroll up. Which school of economics do you subscribe to? I like to joke that I subscribe to the Swiss School of Economics, one, because I'm Swiss descent in terms of my heritage. But second is that I mostly agree with the Austrian school, but I really strongly disagree with praxeology. And the idea that you can't quantify things. And so I'm more sympathetic to the Chicago school in that sense. So it slightly pulls me to the west of Austria from a metaphorical stage of things. But yeah, and that's kind of my take on my economic bias is probably I'm definitely more free market and I'm definitely more aware, try to be more aware of second order effects. What is my minimum investment size? Okay, there's really there's two kinds of qualifications for this. The first one is like straight up 500,000 in liquid assets, particularly for older clients. The second one is if you're a younger client and younger clients are say like 45 and under, like you may not need to have that amount, but you need to be saving at least like a material amount of money, like 5+ grand a month, or maybe 3 to 5 grand a month minimum consistently. And because you'll eventually become the high net worth profile client with the right level of savings and career growth. So those are kind of the ways it works. Either a minimum asset level or a minimum contribution level if you want to work with my firm at Spearhead. Thoughts on wealth inequality, more specifically if it's potentially getting excessive. I did a video about income inequality called Income Inequality is Not That Bad. And I generally stand by what I talked about in that video. So I think that any solution to reduce income inequality is usually worse than the problem. There's a book called The Great Leveler by Walter Stiedel, which goes into basically in the last 200 years, every major decline in income inequality was the result of either famine, war, or a rapid negative change in economic policy, and or horrible inflation, which destroyed financial markets. Like, none of those things are good. And so if that's the solution to the problem, is it a problem worth solving? My answer is it is probably not worth solving. And yeah, I think instead of trying to solve income inequalities, what you need to solve is access. You need to create more opportunities for people, and you need to get rid of bottlenecks that artificially increase the cost of education, healthcare, and housing. And like, I would like, for example of this would be, um, like when it comes to college, like instead of having like a bunch of different colleges of different levels of prestige, you should just increase the enrollment of Ivy League schools, but make the course material harder so that you have a smaller percentage actually graduate. Like, I don't think a low graduation rate, for example, for university is not a bad thing if you're not, it's, as long as the bar remains high. Like, instead of trying to get everybody to a certain level, which is a quality of outcome, what you do is you just need to give more opportunities to people to sink or swim. And I just feel like also I think the society needs to stimulate more interest in entrepreneurship, because especially in the age of AI, like, you can't count on 40 years on a golden watch. Sorry for that little bit of a ramble here. Okay, so Falk, do you not view taxation as a potential solution to that? No, I do not. And there's two reasons. One, there's Hauser's law, which is the idea that taxes as a percentage of GDP are fairly constant no matter what the income tax rate is. Like, people react to incentives, and if you just tax productivity and advancement out of existence, your economy is going to stagnate. Like, look at places like Europe as a good example of this. They have more social equality, but they're a stagnant society. There's not innovation there. There's not really entrepreneurship or business growth really the same degree as America, because it's penalized. And so, yeah, I just don't think taxes are going to solve it. Like, if you want to do taxes to solve it, replace the income tax with a property tax nationally. I've talked about this in my tax video. Wealthy people tend to own more real estate, so they will pay more. Income taxes just punish the middle and upper middle classes, um, and benefit the very poor and the very rich, in terms of paying for the burden or relative paying for the cost of the burden of government. Hopefully that answers your question. The next thing is, how do you feel about the Department of Government Efficiency progress and the share price hit Elon Musk has taken on Tesla? I mean, Tesla, it has its own idiosyncratic moves. I mean, fundamentally, it's well departed from what its fundamental value, and hasn't really been trading based on its economic fundamentals for years now. So I've given up on trying to analyze it from that way. When it comes to I think the Doge is making good progress so far. I mean, there is some risk that it might be derailed by some recent federal court rulings, but yeah, I mean, a lot of people are criticizing slash and burn, but the the Democrats are going to win the midterms in 26. Trump has really effectively 2 years to do everything, really, before legislators get paralyzed by elections. He probably realistically has 1 year to get that requires the other branches of government to cooperate, and the essence too, because the longer things take, it makes the checks and balances will hit a lot quicker. I mean, we'll have more time to really enact. So that's why they're going at such a ramp speed. And yeah, it's going to cause a lot of economic pain, and technology companies have taken the hit of it. And you're seeing a lot of foreign outflows out of the U.S. into international equities. And so yeah, you're going to see companies take a hit for it. But yeah, so far I think it's a good start. Any thoughts on the idea that capitalism feeds off the remnants of feudal relations? What do you mean by that? Because I think it's a very different framework. Like, capitalism is more based off of capital, whether it's IP, whether it's physical capital, machinery, whereas feudalism is about extracting rent. Like, the nobility in feudalism didn't really produce any value. They acquired land through either strategic military or political alliances, and they used their control and their enforcement of the land to extract wealth without adding any real value to their property. Whereas capitalism, the wealth is gained from adding value, whether it's creating better products or services, um, or making existing products or services more efficient. So I don't really see what you mean by that question. And I question the entire framework, honestly, of it, to be frank with you. Let's see. Can you make a video on white collars jobs being increasingly offshored? I talked about that actually with a video I did with Chris Street about, I forgot the title of it, but I think it's like coders becoming a minimum wage job. So I recommend watching that. I went into that. And also San Francisco is the next Detroit. I touched on that topic too. So I've already kind of discussed it in other means. Let's see. Thoughts on the current environment for real estate? It depends on where you live. One, like there are certain markets that are more tight and certain markets that are more loose. I'm not going to go into civic investment decisions. I don't do that on these live streams. So if you have those, just please contact me directly. How different is doing finance in California versus New York? There's a few. One, in California, you have to wake up earlier. The market opens at 6:30 a.m. California time versus 9:30 a.m. New York time. So if you're working at a hedge fund or a big asset manager, or proprietary trader, or investment bank, you're waking up at 4:30 in the morning to get to the office, or maybe 5 at the latest. I had to do that for 5 years, and it was exhausting. You don't really ever get used to it. Second, as a consequence of that, your day ends earlier. So like normal finance people's jobs end maybe from 5 to 7 p.m. You're done for the day maybe at 2 to 4 p.m. So you have this weird kind of schedule. Like when I was going to the gym at 2 p.m., 2:30 or 3 o'clock in the afternoon on weekdays, it was almost all either like stay-at-home parents or other finance professionals who are at the gym at those times of the day. You dealt with less crowds, and the crowds were kind of a few limited demographics. And that's just kind of, and your life is built a little bit differently around that. And then those are kind of the major differences. And then otherwise, the network effects are a little different. Like on the West Coast, you do have a decent sized finance community, but it's not as big. So if you're going to switch jobs, often you might have to move to a different city. Whereas in New York, there's several opportunities all in the same city that you can kind of job hop without relocating easier. But for personal reasons and quality of life reasons, I prefer living out here in the West Coast over the East Coast. Now we got a super chat. Nick equals the GOAT. Thank you for the kind words, Grant. So let's see what questions. Okay, so no, all right. So clarification on the feudalism question. No, he's talking about things like things like employees obeying their employers. How you see capitalism makes the society more degenerate. I don't think capitalism is making the society more degenerate. It's just exposing and providing the things that people would want. I think that you need to have some sort of moral code outside of the free market to regulate morality. That's traditionally religion. It could theoretically be something else, but if you have people have a capitalism plus a strong external moral code separated from the state and the market is the right mix for that. And when you have that other wall break down, it as the guardrail for the markets, it often causes some perverse incentives. Let's see. What do you think about? I'm not going to answer. I don't answer specific investment questions. Is social class the same thing as socioeconomic class? Generally, yes. I mean, but the thing is that socioeconomic class and social class are not purely correlated to income. It's not like tax brackets where if you're above a certain level of income or below a certain level of income, you're in one class or the other. It's a lot. There's a lot of other variables that determine what class you're in. It's more your relationship to money than the amount of money you have on an absolute basis. Um, how long does somebody need industry experience before starting their venture? It depends on how capital intensive the venture is that you're doing. Like if you're in the oil industry and you need to raise $1 billion to create a horizontal drilling well, you're going to need a lot more experience than somebody who's starting a SaaS company who needs 10 to 20 grand to set up. Because one, the 10 to 20 grand SaaS business can be self-financed. And two, the more money you're going to need to raise from outside investors, the more institutional credibility you're going to need, which mainly means work experience at reputable firms. So my general rule of thumb is 3 to 5 years of work experience, but that's more for service type businesses or um, companies that require low levels of physical capital. Like the bigger, more advanced companies that need, if you're trying to start something like biotech company or something requiring a lot of heavy machinery, yeah, you're going to need to have more experience because the credibility gap is wider and the risk is higher. Uh, yeah. Thoughts on Georgism and property tax scales exponentially with the value of total land owned. It seems interesting theoretically, honestly. The problem is not many places have tried it for long enough to see its efficacy. And a lot of people who previously advocated for Georgism just moved on to Marxism because that became the new before Georgism really took root anywhere. So that's why I think that it never really had it never really had a fair shot. Um, Thoughts on a company like Costco that has a higher or average hourly wage versus other companies that have lower wages, such as Walmart. Um, Businesses can choose whatever wages they want. If they think that they're going to have more um, effective employees and have better retention and better quality work due to paying them more, then it works. It's really a trade-off. Do you like? Do you need to retain employees and need high quality level of service? You should probably be paying them more. If you don't care and people are easily replaceable, then you can get away with low wages. But yeah, that's kind of my take on it. I mean, it depends on your business. Like, I mean, it's usually cheaper to pay an employee more than the cost of having to acquire a new one. Uh, but it really kind of depends on what industry and what levels of skills and what the training costs are, and it's a lot of other variables. But I think it works. So next question. I keep hearing that wealth creation and growth requires a mindset shift. Can you at least elaborate on this whole mindset shift? I find that advice almost hollow. Um, I talk about it in my entrepreneurship videos I've done on this channel. Um, it's and so I'm not going to really get into it here, but it's kind of more just um, the simple mind. I mean, it's not. There's really not some magical like worldview that's going to magically make you rich. That's not really how it works. But it's just thinking more of yourself as a business versus yourself as an employee. And like like any business, whether you are an employee or a business, you have to figure out where's the value being created versus I need to have a certain baseline to live, or like I just do whatever I'm supposed to do. Um, but again, I've done several videos about this in my entrepreneurship series. I don't really want to get into good into huge detail on that. I've gotten a lot of questions about Gary's economics. I've not watched enough. I've seen his channel. He seems like he's from England, an ex-trader who now kind of has a more socialist economic bent. I haven't watched enough of his videos to really have a fully developed opinion. I know a lot of you have asked me to reach out to him for a collaboration, and I may be up for it one of these days. But I take a look at it, and I need to have a deeper dive. I don't have that much of a chance to watch other finance content because I'm making this finance content. Let's see. What are your thoughts on Thomas Sowell? Yeah, I'm generally a fan of Thomas Sowell. I like his out of the box explanations for things that kind of go to the core root of the problem, which is usually bad incentives, like when it comes to economic challenges, and explains a lot of things based on economic adaptations on why certain parts of society operate the way they do versus just trying to say that these things are just self-evident, which is kind of the mainstream assumption. Okay. Okay, so we got another super chat. Under 20-year-olds go energy trading. Very few. Everyone is aging out. Crude bonuses. Hard your own business, though. Yeah, I think you do a good job kind of explaining it. I mean, if you want to start your own business, if you want to start your own commodity hedge fund, that'd be, or a consulting firm, or maybe get directly into energy, like the oil industry. But then again, that requires a lot of experience and social credibility because you're going to need to raise a lot of capital to do that. But yeah, good super chat. Next one, from My Truth. I'll search for that video of wealth you just mentioned. Can you please repeat the explanation of you have the video posted pinned? Yeah, let me just go search through my archives, and I will get back to you on that because I don't remember. I don't memorize all the titles of my videos. Is Thomas Sowell still alive? Yeah, he's well over 90 now. He's retired, but he's still alive. Yeah. Let's see. Is the Boglehead perspective still valid? Look, I'm biased because I'm a professional active manager. So you have to take what I say with a grain of salt here. But the answer is I don't think it is because the S&P is too concentrated in a few large companies. And so you're taking on a lot more risk than you think you are, really. And the correlations are not the same. And there's also the problem, which I talked about in my Iceberg of Wealth Management, where I talked about in the first video in that series and the fourth video of that series about Michael Green's thesis about the flaws of indexing. And it's basically that if too many people do it, you get the free rider problem, that it creates an inefficient allocation of capital. And I don't know what that level is, whether it's 50% passive, 60% passive, 70% passive, but there's a certain break point where the herding creates a lot of inefficiencies, and active will gain an edge again if it already has not. So yeah, I'm just going to look and see what the titles of my entrepreneurship videos is for reference. And I'm going to scroll up and see if I missed any questions. And I often miss a lot of questions. So that's why I recommend doing the super chats, because sometimes things, it's kind of like in bursts. Like sometimes they're like nobody asks anything for a while. And then other times you guys flood me, and so I miss things. Yeah, so I'm just scrolling through to see what I've missed on some of these questions. What is your take on the Inland Empire, and what potential can it have, as well as Orange County of LA becomes more mismanaged? Yeah, I mean, the Inland Empire, I'm hesitant in terms of buying real estate there because you want to buy real estate where people want to live versus where people need to live, if you know what I mean. And not to really denigrate the Inland Empire, but most people would not, if it was their first choice, would pick LA or Orange County or San Diego over the Inland Empire in terms of their dream house. It's the same problem like the East Bay versus the Peninsula in San Francisco, or the or like Lehigh Valley, Pennsylvania versus New York or Philadelphia. Um, that's kind of my take on the Inland Empire. Um, and like the Inland Empire, though, if the bull case for the Inland Empire would be is if manufacturing came back to California in a big way, because they have the space to build the factories that they could sell directly to Southern California consumers or export even potentially, because they're not too far from the port of Los Angeles. So if you have a manufacturing renaissance in California, the Inland Empire is the biggest winner of that. So it really depends how you really think that onshoring and a manufacturing renaissance are going to happen in California. So Inland Empire is kind of the winner for that. I've never heard of Ben Mala, so yeah, I'm not going to comment on that. But yeah, I'm going to try to scroll and find these entrepreneurship videos that the super chat asked me about. I did them back in 2023. Um, I would say, let's see. Actually, it might even be earlier than that. It was before the iceberg of economics. Okay, so here are some of them. One I did was titled "How to Make It Big in Your Career," that I did back in what's it called in July of 2023. Another video related to this is Entrepreneurship 101, the path to financial freedom. Those are the two that are the most relevant to the query of like mindset around entrepreneurship. So here's one, and here's the other. Okay, so now let's get back to the rest of this conversation. What is wrong with Austrian idea of a priori thinking? Because there's nothing to back it up empirically. That's the problem with it. If you can't back it up empirically, what's it different than philosophy or political ideology? Give me a second. I need to drink some water. I know I'm getting a lot of crypto questions, but I'm not going to really be commenting about crypto or specific trades. So, but thank you for asking. Do you believe AI is underhyped or overhyped, both in the short run and the long run? I think it's overhyped in the short run and underhyped in the long run. I did a very good video with my colleague Murphy McCann late last year about AI. And a lot of the technology really is major game changers. And a lot of people's jobs, particularly in the white collar world, are going to get replaced by AI. And so, and here's the video for it if you want to see our talk about that. He's actually going to be speaking at our event in Newport with a follow-up live in person about even more recent developments, including like DeepSeek and the new AI agents built by both American tech and Chinese tech. And where are we on the AI? But I think in the long run, we're probably in like the third or fourth inning of this game. But like similar to where the internet might have been in like 2000, 2001, where it got a little bit ahead of itself with the initial hype, but it really all of the anticipation of the technological implications of AI did come. It just took a while. The next stage is going to be creating the software platforms that basically put together a lot of these AI services in a single box. Like, imagine being able to buy off the shelf, metaphorically speaking, or on Amazon, CPA in a box, which is this AI agent that'll basically be able to do everything that your CPA will, or paralegal in a box, or compliance officer in a box. Those are going to be coming. And that is a game changer. And so, yeah, a lot of jobs are going to get automated, and it's going to allow a lot of more creative people who may not have the resources to hire a bunch of people to scale. Like, I've used AI a lot to scale this channel. AI has helped with my editing. It's helped with my sound quality. It's helped with the thumbnails and the descriptions. Like, I don't really use it to make the core content, but I use it to optimize the content and to improve the quality of it. And it's allowed, I have to thank AI innovations to really help me boost this channel. Like, if it wasn't for that, like, I would be having to hire people to do a lot of this stuff, or I wouldn't really have the same reach and scale. So, yeah, I what AI software to use for editing your videos? I use Gling. That's one of them. I use what's it called? Just ChatGPT Pro for Dolly and some of the other stuff. And then I use Snappa for help me with thumbnails as well. So yeah, like, yeah, and then like production quality stuff, I'm working on it. I have upgraded the production quality a lot. If you've seen my videos from like even as recently as 6 months ago, but yeah, it takes me time to learn these things myself, or the channel needs to grow big enough that I can hire people to do a lot of this stuff for me. And the next thing, if I'm going to do a capital upgrade, is I'm going to get I'm going to try to record some videos out of a studio. But the problem is with recording out of a studio is I do a lot of reading of reference material from my screen while I'm recording it. And it's harder for me to do that if I'm recording live at a studio. So, yeah, I also use 11 Labs. I use that for helping me with some of the voices and stuff, particularly of the quotes at the beginning of the videos. So, yeah. I have I mean, I don't know. Also, what do you think of the sound quality today? That's the and the video quality the last, say, like 10 episodes of this channel. Has it gotten materially better, or do I still have a lot of work to go? See, because I've put a lot of effort into trying to fix these. I've upgraded my mic. The thing I do need to upgrade is the camera eventually, but yeah. And then, all right, so I got a live chat. I posted a 2-part question about the state of healthcare costs and obesity. Answer in the chat. Can you please repost it or something? Because I think it got lost in the weeds, Usama. So just repost it, and I will keep in the free section. I will answer it as soon as I get it. But I think I did do a video about obesity with Austin Walters, talking about how that impacts healthcare. And I talked about it with my video about how to balance the budget. The idea really is that I think if you reduce the obesity rate by 50%, you could probably cut the budget deficit by at least 10% in the United States. Like, a lot of the reason why U.S. healthcare is just so much more expensive than other countries is because of our high obesity rate and the lifestyle diseases associated with that. I don't know if that's what your question was about, but I think that has a lot to do with it. Yeah. Let's see. What is the best way to become an expert in real estate investing? I mean, I recommend reading a lot of books about it. I also recommend working at a real estate firm, whether a real estate private equity firm or a more institutionally focused brokerage. And that's how most of these experts that you see in real estate became experts, is by working in the industry for several years. Do you think we'll see an AOC presidential run in 2028? Dems' winning strategy is basically class warfare. I think she is probably the favorite to win the nomination in 28. If I had to bet on it today, like, her odds are surprisingly low in the prediction markets. Newsom is trying to pivot to be the more moderate candidate, but I think he's hurt really by the California fires and generally his low approval rating among people in this state. But I think the fires are really kind of hurt his campaign and maybe burned his chances. He burned his chances of becoming president, pun intended. So, yeah, I think that those two will be the leading candidates in the primary, and I think AOC is going to come out because she is the epitome of the modern base of the Democratic Party. She has the class warfare thing going for her. She's the right kind of demographic, who's kind of the representative of that party now. And she is young, which is a big contrast to Trump. And Vance is going to run on being youthful and new energy, and she could kind of match on that. So, and there's a good chance she'll replace Schumer as a senator from New York now and then too. So that would help her resume. So that's kind of my take on it. Yeah. And then what's it called? Let's see if I have any questions remaining here. And I'm going to try to find see if I missed the reference one about the obesity, because I don't think that the super chat posted. I couldn't find those before. Let's see. And yeah, while I'm looking for this, I'm gonna, since a lot of you guys came here later, I'll give you my recap of my bracket, which I did earlier in the live stream, where basically I think the 1 seeds, the 5 seeds, and the 8 seeds are especially strong this year in March Madness, whereas the 2, 3s, and 4s are relatively weak this year. And so keep that in mind. My predicted Final Four is Michigan State, Florida, Duke, and Gonzaga. And I'm going to pick, it's kind of a coin flip, the Florida Gators to win against Duke in the national title game. Yeah, I mean, that's kind of my take on that. Okay, so yeah, I don't think I have any other questions. At least not any that I see. Oh, here they are. Here's the one that was the super chat I was referring to. I found it. Healthcare costs also on the globe seems like a possible collision course. Thoughts? Yeah, healthcare costs are a big issue, but it's kind of more like something that is just a generational blip. Like, you have the biggest generation ever, the boomers, all hitting the age where they're getting lifestyle diseases. And once that passes through, due to better health outcomes, people being more better medical technology, people being more health conscious, along with just smaller generational cohorts, expect healthcare to drop as a percentage of GDP materially after, say, 2035. But the next 10 years, yeah, I think is right. And the other problem is that those who have the most assets to pay for the health treatment often are the healthiest. Like, I talked about this in my video with my friend Sean Feldman, who I interviewed to discuss longevity back in December. And like, there's a real life expectancy gap between the top 10% of income earners and everybody else. And that income, and even like the gender gap between life expectancy, basically falls within less than a year when it comes to wealthier Americans. And so as like the average person, the top 10%, even though the life expectancy is only 76 years overall in America, the top 10% is 89. So, and they generally have longer health spans too. So that also kind of is another variable here to go in with that. Hopefully that answers your question. Yeah. And then any thoughts on red pill ideology or the diverging leaning of genders? Well, you should have asked me that last month because that was the dating live stream. I mean, generally, like my view on red pill is that there are kernels of truth to it, but it can more often than not really hurt you more than anything. But in terms of are you talking about in terms of GDP? I'm kind of confused here. I'm just, but in terms of the general red pill, it's probably not best for your mental health to embrace it too much. I'm not going to really get into it more than that. What's your favorite LLM to use currently, or to use different ones for different use cases? I use different ones for different use cases. I use ChatGPT for more things that I need, like a more academic type tone and level summary of something, and to go more into details. I use Grok for more sentiment and social driven things because they use X as their source for data. And I'm going to experiment with Gemini. I haven't really tried it enough but I see like there's some potential because it scrapes from YouTube for data. And I use Perplexity for things that I used to use for Google searches in a way. And especially if I need like source material, because a lot of the problems with like things like Grok and ChatGPT is they used to not provide any source material, and now they do provide some source material, but generally Perplexity is better at providing the right source material, so I could go back and fact check all this stuff. And yeah, I do agree. I think the Tritons are the 12 seed I'm picking in this tournament to beat the 5, to beat Michigan. Let's see. How do you feel about the downfall of WASPs as the highest ruling class? I mean, it wasn't the last 25 years. Like the WASPs lost power when the boomer generation WASPs decided to become hippies, and they abdicated the noblesse oblige noblesse oblige in the 1960s. And on one hand, the bright side is it shows that you don't have to be born in a certain ethnic group or certain like class, few limited families to move up to the top. And the perception of greater social mobility is actually really good for social stability. That people can, since there are examples of people moving up to the top through merit of all different socioeconomic classifications and ethnic groups and things like that, it's actually paradoxically creates more stability because you can't blame your failures solely on somebody oppressing you. So I actually think that it's the opposite. It actually probably makes things less volatile because usually revolutions are caused when the social hierarchy is too calcified. Yeah. Let's see. CS or finance? What are you more interested in doing? Like, I don't think you should pick a job solely based off or major solely based off of pay, because that's what a lot of MBAs do. And then by the time they graduate, the economy has changed in a different way that like it doesn't make sense anymore. What's it called? Can you give your perspective on Vietnamese Americans in LA or the US? Well, I mean, I know a lot of Vietnamese Americans because I live in in Orange County, and there are a lot of them in my local Catholic parish. They're actually very successful in the community and have done well. I don't really have anything bad to say about them. Yeah, they're very common here, and in San Jose are kind of the two main enclaves on the West Coast. Let's see. Yeah. What is your thought on the overproduction of elites? Too many degrees, but not enough high prestige positions to have. Um, I think that is a problem, but I also think it's a cultural idea that you are entitled to spot in the elite due to just having a degree. That's kind of the messaging problem more than just um, the overproduction of elites. Um, like I don't really think like the elites by depends on how you define elite though. Like elite, I always think of as just the top certain percentage of society or people who make it to a certain income level no matter what they do. Uh, so you can't really overproduce. What you're doing is instead of overproduction is that you're warping expectations. Like you have a overproduction of aspiring elites more than an actual overproduction of elites. Um, and so, yeah, I mean, I think it could be overeducated and underemployed people are the most dangerous in world history. That's how you've seen major revolutions. So I see it's a problem, but I think that people are adapting and realizing that a certain degree is not going to guarantee you anything. Uh, but I have to think more about it. I asked about that a lot, but I don't really have a definitive opinion or answer of like the implications of elite overproduction. So um, I have to be very careful. Is it likely that AI will remove 80% of labor needed for CS or finance? Um, Possibly. I don't know much about the CS side because I'm not. That's not my field. But I think that you could easily remove like 50% of the finance industry through enough automation. It'll take time. The question is, will it happen faster than natural attrition due to boomers retiring? Um, I think I'm going to wrap this up in about 7 minutes. So get your questions in now, or I'm going to just end it here. But like, I think 2 hours are the right length of this. After that, I lose my voice, and um, yeah, I need to save stuff for the next month. What do you think about living in a lower cost of living country um, while um, while earning USD as a strategy to move up a social class? Well, the problem is that social class isn't necessarily portable outside of the billionaire, very like the top tier like elites. Like nobody cares that you are an upper middle class person in California when you move to um, Shanghai or London or New York. Like they just don't. So you have a lot of it is based on reputation and social connections. And if you move to a completely new place and you don't have any of those, you have a lot of reset to do. Um, so, like, I mean, if the idea is to move out there, save a bunch of money, and then go back, uh, it it that's not really it's not going to move up a class doing that. What you could do is you can arbitrage like your retirement and just rebuild your life up there, and you can be at a higher wealth level. It might be a wealth building strategy, but it's not a class advancement strategy, because the key difference is um, class is not how much money you have; it's your relationship to money and your social capital too. So, but yeah, I think it's a wealth building strategy, but it's not a um, a class building strategy, class advancement strategy. Sorry. Um, do you think that modern evangelical Christian culture will serve as the foundation for democratic recovery in America? I mean, I don't. I think evangelicalism really is not is really changed in the last 20 years to be the root of the revival. If anything, if there's going to be a denomination that revives the demographic recovery, it'd be more traditional Catholic circles. Mormons, in theory, also have high birth rates, but they're coming from a much smaller base than the Catholic community is in terms of absolute population levels. So if like more trad views became more mainstream in the Catholic community, that could be the source of a demographic revival if you had to count on a single religion doing it. Yeah. Thank you. So here's a good comment. A software engineer. I love AI, but AI won't be taking over jobs in the software engineers anytime soon. Coding is only 10% of an engineer's job. So based on that, McNello, what is the other 90% of a coder's job for somebody who's like not informed about your field in terms of jobs? Let's see. I've met a scary number of people who said they aren't going to pay their student loans. How bad is that for the economy? They're just deciding they're not going to, or they just don't have the money to. Like, those are two very different things. And the problem with student loans, they're not really the same contagion because the government is guaranteed the student loans. So the taxpayers are just ultimately going to eat it. And that's part of the reason why, like the Department of Education, that's why their budget is so big, because a lot of their budget is the impairment of these student loans. So that's the answer to that question. Let's see. American test scores are falling drastically. The average American reads at the 6th to 7th grade level. Yeah, I remember people telling me when I was in 7th and 8th grade that the average American was at the 8th grade level. So we've moved down a grade in the last 20 years or so. This kind of goes to this general theory that IQ has declined by 2 points every generation since like the 50s. That's a common concern, and the birth rate spreads in terms of like intelligence and all these other things. The thing is that the question is technology, is artificial intelligence technology advancing fast enough to cover this up? Like, that seems to be what's happening. That's really the question. And until we figure out that, I don't really have an answer to the short and long-term implications, because the population can get a lot less intelligent, but if AI fills in the gaps, none of us will notice. So let's see. Do you see the U.S. global domination ending in the next 50 years? Seems like socially America is quite shaky. No, I don't. I think you'll have a new form of America. I view America now as kind of like America, like Rome towards the fall of the Republic, not Rome in 476. Like, you're going to have a lot of volatility and a new social contract, but you're going to have a stronger America, but probably a very different America in terms of how the state operates and how it runs internally. So that's a better comparison. Like, I think every country is kind of going through a restructuring right now, and some are going to restructure better and some are going to restructure worse. So yeah, and I think particularly the US and China, if they restructure their political structures in a beneficial way, they will remain the dominant countries in the world. If they restructure in a poor way, then they can abdicate and fall back down to the pack. And also, it's really a compared to what scenario too. Like, who is really up there to take the mantle? I don't think the EU is. Mexico and Brazil aren't there. Japan isn't there. Russia and China probably aren't there. So you've got to figure out what country is going to really be able to take the place. Because if the U.S. Collapses, there's going to be actually somebody to fill in the gap. Do you think that one of the issues with the advancement of tech is that there'll be a bottleneck of people who are capable? Society becomes more advanced, it becomes difficult for low IQ. Yeah, that's a real possibility. Yeah, but I mean, a lot of tech has the opposite effect. It makes it easier to use. Like, millennials, I think, are more tech literate than Gen Z at the same age, like in terms of understanding levels of coding or back end of technology, and can in terms of IT and things like that. So a lot of the technological advancements is simplifying a lot of things that used to be a lot harder to do. Podcasting is like a great example of that. Yeah. Next question. I live in San Francisco, and last week I was in Fort Lauderdale. Oh, I was in Miami a few weeks ago for the fan meetup. Small world. I was shocked by the number of yachts and $20 million houses. San Francisco is wealthy, but Florida is richer than California. No, I think Miami's just a little more showy. They display their wealth more so. A lot of the wealth in California is in higher property values and in equity in companies, and whether it's publicly traded companies or startups or small businesses owned by locals in the state. So yeah, I think Florida also is a vacation destination. So a lot of people buy all their fancy toys and park them in Florida. So I think that might be skewing your perception. But Florida is rapidly increasing in terms of wealth. A lot of finance industries moving there from New York, and a lot of entrepreneurs from other parts of the country are moving there because of favorable tax and regulatory and employment law environments. So there is money emerging there, but I don't think it's not really wealthier than California at this point. Yeah, the other 90% includes architecture, design, database design, figuring out what the client actually needs, and a lot is research. Yeah. Is the executive branch overpowered? Should the executive order be nerfed? Yeah, I mean, that's a risk, is that Congress, the legislative branch in the U.S., has decided to abdicate its responsibility, whether through the filibuster rules or just through the fact that the House has elections every 2 years, the paralysis of representatives being primaried or not being reelected in the general election basically causes the legislative branch to just halt operations entirely, unless for the most drastic things. And because a lot of the powers that are supposed to be constitutionally granted to the legislature, they've abdicated, starting with like the war powers rules, like for World War II, I think was the last formally declared war in the United States, where like Truman started Korea as like a police action, quote unquote. The executive has slowly been creeping into the power of the executive branch. And then with a lot more judicial activism, starting with the Warren Court in the 60s, the 50s, you have had the Supreme Court basically make policy from the bench. And so the Supreme Court and the executive are overpowered. It's both of them. It's not really that those two are even overpowered. It's that the legislative branch is underpowered. The legislative branch needs to stop abdicating its responsibility and do what it's constitutionally advised to do. And the other problem is a lot of these legislatures, like particularly on the Republican side of the aisle, they don't. Their personal ambitions often conflict with the platform of the party. Like you run as a party to cut the size of government, but your personal power and prestige benefits from the growth of government, how much money you could shuffle back to your district. It creates inherent conflict of interest for any fiscally conservative leaning legislator. Like the whole drama with Trump and Thomas Massie is a good example, really, of this. But yeah, that's I think I'm going to wrap it up on this one. But yeah, thank you guys all for joining this live stream. I think for April, I'm going to do a thematic one about maybe, I don't know if it'd be a little too controversial, but I did like an Easter, like more like intersection of church and finance type one, like Catholic Christian intersection of like finance, like Vatican finance or all other weird stuff. Or is that maybe a little bit too edgy? Maybe if it's an Easter themed one, or maybe I'll just do a regular Q of A. either way, thanks for going, and I'll also give you guys an update on how my bracket goes and how many of my final four are gone by Sunday. But yeah, enjoy March Madness, and thank you guys all for joining me and asking all the great questions. And I look forward to seeing you guys on the next live, which will be in April sometime.